All right. Hi, everybody. Well, welcome to our Tuesday night call for the Cash Flow Empire podcast. So we're doing this every single Tuesday on 5 p.m. Pacific time and 7 p.m. Central time. And we're excited to hear from all the speakers coming to our podcast. And tonight we have the pleasure to invite Mr. Vic Bell here to talk to us and tell us about his experience and what we can learn from amazing thing they have done. Right. So how are you doing, Vic?
Hey man, thanks so much for having me, man. I'm doing great tonight. So
That's a,
thanks again for having me. I really appreciate it.
that's amazing. We are very excited to hear from you, and I know that you have done a lot. And so, for people that don't know you, Victor, so if you want to tell us a little bit about yourself, we definitely want to hear about your story.
Sure. I can give you the cliff notes of the real estate. So I've been doing real estate for 20 years. I've done over $59 million worth of real estate. We just started a fund. Like I'm not a hedge fund guy or anything like that. Like I jumped into this feet first. I've just started off just like everybody else, one property at a time. We started a $50 million fund. We're in the capital raise phase. We're doing that, underwriting a lot of deals coming across as the market shifted. It slowed down for what's trading, especially for the size of deals I'm looking at buying. I've been a best-selling author. I wrote what, one, two, three, four books. Two were bestsellers. A real estate book, 30 Days of War, ex-MMA fighter. I had a gym called Warhorse Strength Camp. What else? So, I'm just a straight line guy. Like I love real estate. I love that. I love working out. I love training. I love doing this, actually helping people, because when I started, they didn't have podcasts and a bunch of stuff. It was like me and a book. So that's really me, ultimately. So I know it's not exciting, and I'll get into the story of how it transitioned. It's a doozy story. Everyone that hears is like, wow. but yeah, humble beginnings of getting into real estate.
That's a lot of great stuff already here so far, Vic. Of course, want to hear more about all of your journey
Yeah.
um, from there. And so, I mean, just for people that for the personal background, right? So you are from California, and you used to live in Hawaii. Was that correct?
Yeah. So we moved to Hawaii I'm sorry, we moved to California roughly about 5 years ago. We lived in Hawaii for 17 years on Oahu, but I'm from Texas originally. So again, so I left home when I was 12 years old and gotten a lot of trouble and stuff like that. Graduated from kicked out of high school, went to another school, went to the Army, got out, got in trouble, got a felony charge. And while I was on probation from that felony charge, I got a book from the store, and that's how I started doing real estate. Everyone hated their jobs. I hated mine too. I got a book from the store. It was like an old Ron LeGrand book, Fast Cash with Real Estate. And that's how I got started. That first year, I did like $1.2 million worth of real estate. Point of that was like, like you look at your life, you go, man, if I knew then what I know now, I would do it different. So when I started doing real estate, I got out of the Army and I was back in Texas because I left there, went to Hawaii. I was stationed in Hawaii, went back to Texas. And then when I was in Texas, starting to do real estate and stuff like that, I met my wife now, Sharon. And she got stationed in Hawaii. So I got to go back to Hawaii now and do real estate. So it was an interesting thing because it's like I didn't know what I was doing. And if anybody that's ever done real estate, like from Texas or the southern states or anything, real estate wasn't that expensive back then. It was like 30 grand, 50 grand, stuff like that. And then you leave there and go to Hawaii where like that same property is 300,000. It's like mind blowing when you're like, oh, I'm going to try to get a deal. I have no money, no credit. I barely know what I'm doing. And all of a sudden I'm thrust into this scenario. So was there for 17 years. I did a lot of real estate there, a lot of multifamily properties. I do a lot of subject to deals. That's how I do houses because I don't like to take risk. I'm scared. I don't like to lose money. So then after that, we sold all our apartment buildings and a few houses that we had. And I had a partner actually who was a financial partner, yanked some money out of a deal that we had. And that hurt. I had to sit down with my wife and be like, we were supposed to get an extra $250,000 on that deal, and we did it, and we bust our ass for that. And I was frustrated about it, and I was like, it's okay. My problem, I answer everything with I should have more. So rather than look at it like I got screwed, I was like, my problem was I only had one investor in these deals. I should have had hundreds of investors, not one. Because if I had more investors, I wouldn't have cared, because I would have more deals. I'd have bigger deals. So anyways, after that happened, we sold our apartment buildings, and I got back in the market because I got lazy. I was winning, so I stopped looking for deals. And I went after a deal, and I talked to an owner who was actually he inherited the property from his family, and he talked cash money to me. You don't know what you're doing, blah, 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 blah. And I was just like, and I got off the phone with him, and I called my wife, and I was like, we're moving. And she was like, what? Like, because she had been wanting to move for a while, but we had properties we couldn't. When you're in these long multifamily properties for 10 years, you can't just pack up and go when you're the operator for investors, right? And I was like, yeah, you know what, we're leaving. I was like, I want to do something big. I cannot do it here if this is who I'm going to be dealing with in the future, this type of owners. And I was like, she's like, where you want to go? And I was like, let's go San Diego. I've been there for a couple of conferences. I didn't know anything about California. We had no family here, nothing. And she's like, when you want to leave? I was like, end of the month, we're out of here. So I had a gym at the time. I closed my gym, Warhorse Strength Camp. And we were like, let's go. Pull my kids out of school, and we left. As a matter of fact, it was December. This will make 5 years, December 14th. And we lived in a hotel for 2 weeks because we didn't have a house yet. We didn't know where we were going to go. I didn't have any network here, nothing. And but I said that to say, to your point, I left and I got here to California. That's what got me here, that whole road of leaving home and stuff. And then I got here, and I've done more probably in the last 5 years than I did the last 10 years in Hawaii, because I came here motivated. I kind of lost that drive because I got comfortable, because I was winning at gym. We lived on a beachfront house. I even had a limousine at some point, a driver, like just wasted money on dumb shit. But all the stuff you do when you think, I'm gonna have a bunch of money for real estate. Then you get it, and you're like, man, I don't have any place to park this limousine without a PUC license and stuff like that. So it was just like, it was cool, but I had to get back to work. And I knew that Hawaii, I had outgrown it because I did a lot of real estate there. California was big. So that's how I kind of got into this space, cut my teeth on the capital markets. Like, what do the big guys do that I just don't know? Everybody's like, I'm going to own like 10,000 units and I'm going to rock out. And then you get around and you start realizing these all guys have funds. They're raising capital. I wasn't doing that. I was like, oh, I'm going to go find a deal, and then I'm going to go raise the money, and then I'm going to put in all the work, and then I'm going to pay all my people, and they're going to appreciate me for that. And they do, but at some point it's a short-lived thing. So I really had to spin the polarity on that. I don't turn away deals that make me money, for sure, but but over the next decade, we have a very specific plan, and I'm gonna dominate in this market, in the market everyone's running from, because I learned how to operate in low cap rate markets, which was Hawaii.
Nice. One thing I like that you said about yourself, Vic, is that you said you did martial arts.
Yeah, MMA. I fought professionally.
Nice. So I got a little bit of wrestling and jiu-jitsu. So
love it.
Really cool. I already know what kind of mentality you got, that hard work and discipline. So I love it, man. Shout out to that. But going back to the market, man, once you moved, because let's talk about your market, because we're from Texas. Well, first of all, everybody's everywhere on this call, man. We got people all over the US.
Nice.
California is just a market that we hear a lot. That's just like, we don't look there. It's not good. I'm from Texas. I'm from Dallas. It's obviously a hot market. It's really, really good. It's popular.
Right.
It's somewhere where it's very competitive for sure. But we're very successful at finding some deals just throughout the relationship we got with brokers. But tell me more about your market, man. How are you able to kind of maneuver through your market, and especially one that everybody just kind of shits on, per se, because everybody hears California and they're like, I'm good,
Right. No, man, I totally get that. California is a great market. It's like when you say Dallas, I can be like, where are you from? South Oak Cliff? Like if you're from Texas, you're like, oh man, I don't know. That's a rough area. So like people have a misconception. Usually when people say California, what they're really saying is LA. Right? LA County, it's rough. Like you go there and you're like, dude, this is a rough market. There's a lot of laws here. There's a lot of rental issues. But San Diego is a whole different market. It's a whole different, it's like Houston and Austin, I'm from Texas, so I get it. Right? I've played in all these markets, right? Like Houston, you can build a strip club next to a high school, next to an apartment building, right? Like you just do what you want there. But like Austin is like, nah, you're not doing that. It's like super that. But San Diego's the same way. So like there's more opportunity here, but to your point, California, the cap rates are kind of the same right now. Right. So if you're going to get in a deal, it don't matter whether you're in Dallas, you're in California, you're in Florida, you're in Miami, you're in New York, you're going to play. If right now the cap rates have risen a little bit, so every place is expecting a 5 cap on A class properties, right? You might, some of the stuff's here still trading at a 4.25 because people here have capital, people here have money, probably like there, right? So if you know that, then the price don't matter. Then it's just rents. So it's like, well, I mean, if everybody's paying $1,800 to $2,200 for rent for a 1-bedroom, 2-bedroom, basically $3 a square foot, and if I'm gonna command a 5% cap rate, I'm not thinking about my cash flow. That's for my investors, right? I'm gonna raise the rents as I go if I get a stabilized property. My whole thing is, and think about this, because I bought properties in Ohio and stuff like that. I lost my ass on a 40 unit deal in Cincinnati, but like, if I know that I'm going to exit a deal and I'm going to make $1 million, $2 million, $5 million on a deal because my cap rate is constrained based on the amount of capital and my market is tight, I'd rather play that game. I don't want cash flow that much because cash flow just sustains you. But the big power play is the big exits. So when you figure San Diego, as it relates to California, it has the barriers to entry for me, just like Hawaii. That's why I liked Hawaii. Ocean on one side, mountains on the other. That's it, right? Everything in the middle is fair game. San Diego's the same way. You got the coast, which ocean on one side, mountains on the other, fair game in the middle. You don't have that in Texas and some of these other markets where, like, you look at Austin right now. Austin market they're banging out what, 43,000 more doors, and they're probably only going to get about 20% of those units absorbed over the next couple of years. Texas has always been a boom and bust state for me. I'm from Texas. I love Texas. I bought all my properties in Texas. When I moved to Hawaii, I left there and bought apartment buildings in Texas, so I get the market. I'm from Killeen, Texas, actually, like the hood of the
like military. There's a Fort Hood.
Yeah, the
right?
base is there, Fort Hood.
Yeah,
Weird. Yeah, people are PC now, so they changed it. I think that's dumb. So, but whatever. But it's like, yeah, but to your point, man, like everyone has this concept because they watch the news. Everybody's leaving California. Well, people left California, went to Austin and Dallas and Houston, and kind of you go there now and you're like, dude, there's a lot of homeless people here. And if you look at really the markets where a lot of the money went, like hedge funds, private equity people, they went to California. If they already didn't release, like I think Blackstone bought like 6,000 doors here while all this was happening. They weren't running. They went to Dallas, they went to Houston, they went to Florida, they went to Miami. So if you're just watching it from that perspective, they stayed out of LA, to your point. So like while they were watching, like, everybody's running away. It's kind of like San Antonio. San Antonio, my daughter is stationed in San Antonio. So it's like everyone's like, oh, San Antonio, man, it's going to be a bomb. I'm like, dude, you missed it. San Antonio is a great market, just like Dallas. Dallas is going to keep pushing because they're so big. They can go Fort Worth. You can go push out. You all the way to Paris, Denton. Like you could push out, but you can only push out in so many areas. That's why I like Cali, because you're always going to make money here. As a matter of fact, if you watch what really happened over the last 10, 20 years as it relates to real estate, it's a multifamily real estate, not just residential, right? So if you look at all the people's money that actually flooded all those other markets came from California, New York, and they dumped money down into all these other markets. As soon as the markets crashed, they yanked all their money back. You'll get it, because I'm like MMA and wrestling and fighting. We always look at it like from a warrior standpoint. You left your castle unattended, so now it can get sacked. Which is why I moved here. I was like, shit, everybody's going to take their money out if something bad happens. At the time, it was just bad happening to me. So, but then it happened, and I was like, oh wow, I've seen this before, because it happened in Hawaii too. The Japanese bubble, like all the money from Japan came over, bought a bunch of properties. Japan's market crashed, their capital market crashed. They yanked all their money out of there. They dumped everything, pulled all their market back to Japan, and then all of a sudden there was just properties upside down. People didn't care. Like that's what happened, and it's happening now too. But now it's not happening. I literally just did my training for my investors on this. Now it's not happening to the little mom and pops. Little mom and pops are going to be okay. It's the big money. We got a list with over $2 billion worth of loans maturing in multifamily property just in San Diego County alone. And I'm hitting every one of those groups up. And it's the same people. They own a portfolio of properties. I'm just like, hey, man, the difference of this now, probably for guys like myself and probably like for you guys too, is we know who to call now. Like you said, brokers, and if they're a fund, and because I learned this because I have a fund, You have an acquisition and disposition department. Before, you're just hoping to catch some mom and pop who's tired. These people aren't tired. They're just like, hey, my investors want their money back and the debt market is tight. I'm not going to refinance. We're going to lick our wounds, move on. We're going to sell these assets and keep it moving. We'll just play the next game. We'll take all that money that we lost, go back to our investors and go, hey, give us a chance to get that money back. And we'll buy the debt that is maturing and we'll recycle it. That was my big aha, because I had to get out of being this entrepreneur. I'm just going to hustle up and get another house or get another small multifamily property and live on the beach and make some money. And I had to become a real player. I was like, how do I become a real player? I'm tired of writing down my goals that I'm going to do $1 billion worth of real estate in my lifetime and never get there, because I didn't understand that this game had nothing to do with real estate. It had everything to do with high price markets, low cap rates, debt, raising capital, and then taking care of your investors, which we probably all did for free. And now we're like, oh shit, we can actually do this game, right? Even if you're a little guy, you got to learn I learned the real estate first, and then I moved into the capital space. Some people know the capital space because they had a job working in those environments. And then they started realizing that real estate was a good vehicle for them, but they understood the money. I was never able to put the two together because, one, I didn't have the education. Two, I didn't have the mentors. And three, there was no information about, that was happening with guys like yourself putting this together.
I love that. You actually, that's actually something I kind of wanted to dive into, just because I like that you're pretty well diversified. You've done some single family stuff. You've done the multifamily. You got the fun going on. What is something that you kind of want to, dang, what was that question? It just slipped from the tip of my tongue. You just mentioned that, oh man, my bad. I went blank. I just had it on the tip of my tongue. You talked about education and really know the difference. That's what it was. The difference about knowing. You're like, well, you're on the like the relationship side, and then on the other side, can you touch base a little bit more, elaborate a little bit more on both of those concepts and what you learned on both sides?
On the real estate side, and then moving over to starting the fund.
You kind of you just brought up a thing of, you're like, well, at first, I was on this side on the real estate side, and then I learned this side. So can we kind of touch base on a little bit about that?
Yeah. So to set that up, I learned through frustration. like I fail so much at something. I'm a stubborn person. That's kind of the only, I'm an MMA guy, but I was never really that good. I'll just show up. I'll just take you down, keep you there, take you down, keep you there. You tap me out, beat me up. I have eye damage from all that stuff. I just keep showing up. So real estate was the same way to me. So the thing, I brought that up about the frustration because I was on the real estate side. I'm like, dude, how are you guys doing this? How are you guys doing this? I would just keep asking questions and oh, we're doing this. And it would open up another question. So at some point I was like, I'm never going to get where I want to go just doing deals. And the big pivotal point for me was I found a deal when we first got here. It was 128 units. And this deal was a screaming deal. And I knew it. And it was it was a bigger deal. I wanted to do the deal here. And I brought it to a couple of my buddies that were investors with me for the last 15 years. And they were like, oh man, you got to get this deal for cheaper. And I was like, dude, I think this deal is going to trade for about $30 million. It's never been on the market. I know 100% that if we get this deal, we take this deal down, we can raise the rents. And I promise you, we'll probably triple whatever the down payment was in this deal. We're doing basically damn near no work because it was already stable, right? It was just it was a sale through a death in the family, and it went to the kids and they didn't want it. And they didn't, my partners were like, we got to get it for cheap. We have to do this. And we got to go back and renegotiate. And I did not get that deal. I listened to them and I knew better. And then when I didn't get the deal, it traded for what I thought. And I was asking some of my buddies when I was like, hey, why didn't you just tell me you didn't have the money? And they were like, well, and I was like, yeah. Just say you don't have all of the money. I would have went to more people, but you crushed the idea and you made me think that maybe I was wrong and I doubted it. So that was the big pivotal point through frustration. I was like, okay, so what are the people that are not missing these deals doing? And they were like, oh, they have a fund. I knew syndication. I had already kind of put together some deals, and I started that process with Jillian Sidoti years ago. And now it's Nate. They're my attorneys now. But I pulled away from it because I raised all the money without needing to do that. So I understood it. But I made a commitment. I was like, I'm not going to miss another deal for what I don't know now that I know. I can't go to my old network thinking that they're going to get me through. They don't get it. I had to outgrow them too. I couldn't just outgrow Hawaii. I had to outgrow this whole thing. So that forced me to go to like, I started going to these capital conferences. So like I went to one, and this is funny because I go to one, I signed up for one. One of my buddies who's a wrestler, they ran one. It was called the Pitbull Conference. They're not the Pitbull Conference no more. They still are. Matt Rosen, he's a buddy of mine, and you know, he was a wrestling coach. So he's like, oh, come to our conference, man. We do this. We're all private lenders and blah, blah, blah. So when you hear the word private lender, guys, what do you think? Private lender, right? Now, I was like, fine, I'm going to go to this conference. I get there. None of them are private lenders. They're all hard money lenders. I didn't know that, right? So I'm walking around like, first, the conference doesn't start until 5 p.m. And if you go to a real estate seminar, that shit starts at 8. It's over at like 9. You're in there all day. I get there. I'm like, where's everybody? And like, oh, don't start till like 5. And I'm like, 5? How do you have a conference that starts later? And I'm like, where's everybody? We're on the golf course. We're drinking. We're doing this. So the first day they didn't start till 5, and it was a cocktail party. The next day they started at like 11 because they were all drunk from the night before. And I'm like, what is this? Like, this is, like, I had no idea. So then they're walking around and, hey, I didn't even know how to introduce myself. I kept saying I'm an investor. And they were like, oh, okay. So they're all talking to me and stuff, and they're finding out they're brokers. And then by the time I got to the 15th person, one guy goes, hey, you're a buyer, right? And I was like, yeah. And then it dawned on me, different class, different world, different environment. That was the shift. I didn't even know how to introduce myself in these rooms. All these terms that you hear, private money lender, we think it's just some guy who has some money sitting off to the side. No, hard money lenders wanted to change their terms because it seemed too abrasive and they had a bad rap. So they started making a better name for themselves, turned into a marketing ploy. Like, hey, but it was still institutional capital, right? You know, hey, you got to get a loan. You got to qualify. We're going to rake you over the coals. So that became this new introduction. Like, I had no idea. I was sitting in those rooms and they were like, oh, this is a couple of years ago. Trump's not going to win. It's going to be Biden because here's why. They got to put X amount of dollars into the market. And if Trump wins, he's only going to spend X. Biden's going to spend X trillion dollars. And they were talking about shit that hadn't happened yet. And I was like, oh, wow. I didn't even know that was real. And then when it happened, Trump didn't win. Biden won. They knew all this capital stuff was coming. I had no idea how their world worked. And that's what did it for me. So I had to shift from being this real estate guy bragging, hey, I've done all these deals, to being quiet in the room, where I used to come home and tell my wife, like, damn, I'm surprised they didn't kick me out of that room because I didn't know what the hell they were talking about. It was like a whole new language, a whole new this. And, you know, I started my fund. When I was going to these things, I was like, I need to learn capital. So I spent a year going to those conferences, learning what mattered to them, how debt really worked. Not, we're all consumers of debt. We'll be like, hey, I want a loan. And we go, we find the, you know, the debt service coverage ratio, points and all this other shit. They're looking at it like, hey, this is our cost to that capital. This is the lines that we have to tap into. If those lines get cut, here's this. Here's how we make money. I had to get a real understanding of how that works, non-real estate related. And then I started kind of getting a better understanding. Like when they say, yeah, I have a debt fund. I was like, all right, what does that mean? Right? I mean, because, I mean, I didn't know. Maybe other people were smarter than me, but I've been in the real estate trenches for so long, grunting it out, bragging about how I did a bunch of no money down deals that I lost sight. It's when I got bank loans, I was still a consumer. They were just like, okay, you know, it's 2 signature loans for multifamily properties in a local bank in Hawaii because they didn't have national banks. So I was cut off from that. So to your point, that was how I had to, and I know that was a long, sorry about that. Like I had to kind of get used to saying, hey, you know, hey, I'm Victor, and become the chum in the water in those rooms. Because if you say, yeah, I'm an investor, they're, oh, cool, nice to meet you, man. Let's talk. If you have any deals, send them to me. And I'm like, well, shit, that's not what I wanted. So then when I was like, no, I'm a buyer. I'm looking for capital. So if you guys have some money, let me know. I'm looking at these deals. I'm looking at these deals. I'm looking at these deals. All of a sudden, you know, I'm like the hot chick at the club, right? But that's, I mean, I hate to say it, but it's all a game. And once you know what the other side's game, what's the rules? How do they score? What's the points? What's the rules? How far do I have to run? What's the takedown I got to do to get this done on this guy? Like, then all of a sudden you go, oh shit, I know how to play this game and I know how to play this game. And then you become really effective at what you do. And the other piece is not to also become one of them, right? Like I stay stupid on purpose in those rooms because I'm like, oh, what's that? Even if I know what it is, I'm like, I want them to feel like they got a sucker on the line, right? Because you'll help a sucker. You help what was that saying that people used to say, God saves babies and stupid people. I want to be saved if I go to a room full of people who are smart. Oh, Victor, don't worry about it. I got you, man. Let me show you how this works. Even though I know, because at some point now I can contribute to that. We're like, oh, you know what? So it's like this. So if I did this, you are able to do that. Yeah. Okay. Let me go get that for you. And then I become the guy, right? So I had to learn to do that. And I spent probably 2 years doing that. Whereas like I didn't know what I was doing. I was asking questions, running back to my car, Googling shit on my phone. What does that mean? Um, but it works because nobody looked down on me for it. Everyone was like, dude, like, let us help you. Let us put you in contact with this person, this guy, that guy. So that's helped. So that's the, I hope I didn't make that too long and unnecessary, but that was the shift for me. How do you go from this real estate guy to being a guy that has a fund that really now I'm in the finance world? Because I think what's his name said it, 100%, 90% of millionaires are in real estate, 100% of billionaires are in equity. So I was like, shit, I'm in the wrong business. I need to move over. Right. So that was my thing. And I needed to learn that game, and I have. So now it's just doing the work. And be honest with you, if I can share you guys a secret, how many people on here? 27. I'm going to share this with you. It's going to blow your mind. No one knows what the fuck they're doing. No one. And I share that with you because if you think you're just not good, you are. It just takes time. Because no one knows. Even if they tell you what they're doing, it doesn't mean it's working in order to work for you. You still got to put forth that work. And man, that's probably the toughest part for someone like me, because I move really quickly, which means I also get over shit really fast too. So I'll move on. So I have to learn to stick with something. And because this has such a big runway, it helps.
I love it. I love it, Vic. I mean, thanks for sharing that. How many guys getting some values out of tonight, just from what Vic have shared so far? If you can share some love, share some fire in the chat, right? I know some of you guys are first time joining the call, so put number one there, and then Vic had a lot of excitement, a lot of knowledge dropping right here, right? If you already been here, I mean, second time, third time, always been here, please just share with us like why you continue to come back to this podcast, right? So for Vic, really, thanks for sharing that, because a lot of people are thinking coming to real estate and think I have to know everything before I have to take an action.
Yeah.
So and I think that stops a lot of people and prevents a lot of people from taking actions too. It's like sometimes people are just sitting there for 6 months, a year, just not moving. So my questions is, when you have a lot of people are doing syndication, I think that's your background as well. From syndication, you go into the fund. So from what you know right now, what would you recommend people to do if they're doing syndication at this point? What should they go into a fund manager? What's the process takes? What does it take to get there?
I think this is my opinion, guys, because I'm thinking about real estate as a business now, not just as real estate, right? So I think personally, it's better to start a fund because I can raise money all year, and I can still, and I learned this, you can still start a fund, create a marketing network, so create a marketing channel so you can raise capital all year. You're always in the face of investors. You're always talking to them. You're always showing them what you're working on, what you got. Then if you get a deal, you can actually just fund that deal as a syndication deal. You have a successful fund, shut the fund down and start fund 8 or 9 or 10. You don't have to just keep syndicating a deal. That's costly, right? Because every time you're done, you're done. But with a fund, you can be like, hey, I'm going to keep raising money. We got one deal in the fund. If I find a sister property to this deal, I'll do that. Or I can shut it down. It's a successful fund. That's my new PR campaign. Hey, look what we did. And then I go back to market and I keep redoing it because, I mean, you're not going to stop doing this. There's no one person I've met that owns 100 units and that's it. They get to 100, they do 1,000. Then they get to 2,000, they get to 5. So that you're not going to stop doing this business, and it costs the same amount of money to do your syndication as it does to just start a fund, and that paying the money to start a fund really gives you a free ticket to bang all year, market. Why would you not do it? It's like it doesn't make sense to do. And and I've been telling people this is the first time in my life for 20 years as it relates to real estate that I'm not frustrated. I'm not in anxiety. I have no pressure to go run off to go grab this deal because I'm responsible to make money for other people, as opposed to in the syndication, I get a deal and I'm like, shit, what do I got to do? And then I'm out raising money. That's fine if people already have that. I didn't have that network built out. I had my very specific business buddies. We made a lot of money together, and that was cool. But that's short-lived. Like I said, if you're going to do something for 10, 20, 30 years, which if you're going to get in a multifamily, your debt is going to be 5, 7, 10 years. And if you refinance early, pay your people back, you're going to reset the clock 5, 7, 10 years. That's not a side hustle. That's a marriage. So if you're going to be married, man, go all in. Just, I'm going to keep raising money. I'm never going to stop. Right. Because then it's not on you anymore. It's not on your investors anymore. It's on you to continue to produce if you're going to treat this like a real business. It's never been easier to do that. And you want to keep doing it, because as it gets harder for people to, this is my opinion, to answer your question. If you don't start a fund, my next goal is to start a Reg A fund. And I hear people talk about it's a headache. It's a lot of money. I know a few people who've done it. It is expensive, but I want to do it because as I think this market corrects itself, people who actually screw a bunch of people over and they start losing people's money, it's going to get thrown in the court. I know 2 people specifically, know them that got sent to prison based on their SEC jacking around with other people's money and shit like that. Right? So as those cases start to become new case study, it's going to be harder and harder and harder to do stuff. They're going to put new laws, regulations. You got to do this, you got to do that first. I think the people who actually play the game, raising money, having a fund, do a Reg A fund, a Reg D fund, a 506C, not B first, those people will be less regulated because they'll kind of be grandfathered in. Right? And you'll already have momentum. You'll know what it takes, and it'll be a lot easier for your stuff to get passed because you're going to have a working playbook or a working business plan. And the longer you wait to do that, you're like, man, we used to be able to do it. Now we can't because we need this, and this, and I'm not set up to do it. Why wait? And it'll be guys like us on this call, or, women or men like us on this call that have made the decision that we're going to go all in on this platform of a business. We'll figure out the hard stuff early. So as it gets harder for everyone else, it'll get easier for us, right? That's that old model. Things that are hard in the beginning get easier, and things that are easy in the beginning get hard. So it's just kind of picking that. So that's kind of my advice. So like, should you syndicate or become a fund manager? I would always say do a fund. Only speaking from my experience, I didn't go do the syndication thing. I wanted to keep raising money and learn how to build an actual capital company so I can roll that capital into our deals versus the other way around.
Nice, man. Dropping some bombs tonight, man. I appreciate you, just your honesty. One of the things that Jimmy forgot to mention is that here at the Cashflow Empire, we just take a lot of pride on bringing individuals like you, man, who talk about the dirty, the ugly, the good, the bad, the truth of real estate, of experience. And I just appreciate you being extremely transparent and just really just sharing, the shit you've been through, because, you're telling us, look, man, I prefer fun, and this is why. Mm-hmm. I know some horror stories on people losing a lot of money. SEC, they went to prison. I actually know one guy too, who jacked around with some other people's money. You robbed Peter to pay Paul kind of stuff, to save on other deals, and shit can go wrong, But I know you said you've had some losses too, man.
Yeah.
I'd love to hear a little bit more about that if you don't mind talking about it. Just talk about that experience on. How you kind of, grab that bull by the horns and just kind of learned from that, or what happened, and just kind of how were you able to build after that?
Which loss you want to hear about?
Man, give us the loss that you most learned from, that anybody in here, maybe it's their 5th deal, maybe it's their 4th deal, or maybe they're not even in their first one yet, but now after tonight, they're going to think about this in the future and be like, damn, you know what? I remember that one night Victor Bell said this.
Okay.
So
yeah, this one, I'll just share the deal that we did that was in Cincinnati. I've had other challenges. Like I said, one of my partners that I was a partnership with for a really long time, he took some money from me. That was a lazy thing for me. We had an agreement in the beginning. I was doing all the work. He was a financial guy. As things shifted over a 10-year period, the agreement shifted. Right. But I didn't go back and be like, hey, let's write that down. So that was one thing. So, paper it, that's a main thing for you guys. Papering doesn't cause distrust, meaning like write it down, get it in writing. It doesn't cause distrust. Even in email saying, hey, I know we said we're going to do this. Now we're doing this. I just want to make sure we're good. And I'm going to shoot you that email. Just okay it, say you got it. And we'll just take that as you agree, and I'll move forward with that. That's enough to stand up in front of court to show somebody, go, hey, we agreed to this. This is the new agreement. And that's what I was basing everything on. So that's one thing that wasn't really a failure per se. That was a lazy cost that cost me $250,000. Real money, did not hit my account, sucked, belly cried over it. Boom. So, but the deal that I ended up getting in Ohio was, I mean, unfortunately, and it just, that was in the 2007 range. I mean, if you've been in the business for a while, everyone has this 2007 story. The reason why it was interesting to me, because I didn't understand all the stuff that I know today. I didn't know what a market cycle was. I didn't, and I was also, so you guys know, I was also a coach, one of the personal coaches on the coaching staff for Dave Lindahl, the RE mentor, for those guys, because I was a student and I was successful with what I was doing as a student. So they brought me on and I became a speaker for them and stuff like that. So I was the guy, how people are like, these gurus, man, they know everything. And then we get hammered and you're like, oh, because I was actually out doing the business. I wasn't just an infopreneur, right? So I got this deal in Ohio because at that time, people don't even say this word anymore. It used to be repositioning. Now it's value add, right? Because all this stuff's the same shit. Back in the day, it was assignment of contract. Now it's wholesale. But back then, people were doing reposition deals. Basically, it's the same thing you see now: rehabbing the units, changing the name of the property, painting it, making it nice, raising the rents, and bringing it back to market, refinance, take a cash out. That's what I was doing. So because I was in Hawaii and I was listening to everybody around over there talk about how expensive it is, you can't get a deal, I bought a bunch of multifamily everywhere else. Texas, we did one in Vegas, we did another one, the one in Ohio, we did one in Michigan, North Carolina. So I was bouncing around all over the place, running from my market because I was chasing cap rate. I was chasing a 10 cap, 11 cap, 8 cap, a 7 cap, a 14 cap, which was normal back then, right? Because, you'll never see that shit now. It don't even matter what market. But that's what I did. So I got this property. It was about 40 units. It was 50% occupied. Somebody else from a seminar that locked up the deal that was doing an assignment of contract called me because they're like, hey, we heard you. And I was like, yeah, for sure. I'll take a look at it. So I did it. It was about 30 grand to get into that contract. And they negotiated the deal, but I'm one of those people, like, even though you negotiate the deal, I want to renegotiate the deal because I may not want your terms because I might have got something different because I'm a really good negotiator because I learned real estate with no money. So I'll go back and ask for shit that most people are afraid of. And I do a lot of subject to deals. So I understand taking over debt and making those payments and blah, blah, blah. So I did that. So I negotiated the deal, no payments for 12 months, take over on a land contract. And I got something else too, like something ridiculous. So I started the deal. So these were all 3-bedroom apartments, about 40 units. So, and they all have bathtubs. So you can imagine three bedrooms, single moms, probably Section 8, with a bunch of kids taking baths all day, filling up the tub, draining it, filling up the tub, draining it. So I was like, okay, cool. I can do this, man. I got no payments, blah, blah, blah. I put a bunch of money in escrow and we got our property management company who was also going to be our project manager because they had all the people. I didn't live there. And again, I'm chasing the deal. I'm like, shit, man, it's too expensive in Hawaii because I hadn't looked. And I was like, I'm going to go because I'm going to all these seminars. I'm reading all these books and they say buy low, sell high. This is my opportunity to do that, right? Because I had already had some success. So fast forward, getting into this deal, we bought a bunch of product. I was going back and forth over there. That's one of my mistakes. I wasn't there enough. Even though I was going there maybe like once every other month, once a month, I wasn't there enough. So what the project manager was doing initially, again, lazy. I don't do it anymore. When I'm winning, I start to ease off the throttle a little bit. Right. I started to become invincible. So at first I was signing the escrow checks and then they were called like, hey, Vic, they need an escrow draw. And I was like, that's fine. Just let them sign it. So I stopped paying attention. And anytime you don't pay attention to something, that shit comes back and bites you. It'll pay attention to you. You just aren't paying attention to it. So I was go down there. They will renovate a unit, you will renovate 2 units at a time, cabs, floors, whatever. We switched out all the because it didn't have showers. It was an old building. Cincinnati, it was like a brick. This place was gigantic. I was like, wow, this thing's massive. So what we did was we went, instead of going in the walls, we went out of the walls, put in like the handicap shower thing where it kind of spigots out of the thing. And we cut the water bill down to like half. We went from like 10 grand a month to like 5 grand a month, like just like that. And I was like, oh man, I'm crushing it like right away. So we did that. But then when I would go down, they would renovate a unit. I would leave. Right. And then I would be gone for like a month or two, a month and a half, maybe a month, maybe, stuff like that. And then I started getting these calls from people like they were the manager, but I started getting calls from one of the tenants that I had talked to. And I kind of didn't really trust the guy because it wasn't in a good neighborhood. It was in a D neighborhood. Right. But that's what Ohio had at the time because they were cheap. Like I said, money flooding from California was running over there, making the market build up. So I called the dude. He was like, hey, man, these guys are stealing from you. And I'm like, okay, man, but you're probably stealing from me. Like that was my mind. Right. So no big deal because I know tenants complain and they knew who I was. So they got the opportunity to contact me. So before you know it, long story short, I had a broker that called me that was touring people around the area, taking a look at properties. And he went to mine. So he was like, hey, Vic, when's the last time you've been to your property? And I was like, man, it's probably been about a month. He was like, you know what? They're stealing from you. And I was like, all right, stealing, and I'm thinking, when you say steal, you think money. And I'm like, all right. So then he was like, look, he said, they're stripping units. He said, there's a truck out here now. And I was like, all right. So I called and I told him like, no, we had this and we had this. We got the wrong materials. We needed to pick it up, drop it back off, blah, blah, blah. No big deal. So then I get a call from another owner that was like, hey, are you doing business with Purnell? It was Purnell Third Day Properties. That was the name of the company. And I was like, yeah, they're my project. They were like, hey, they're stealing from us and maybe about 70 other owners who have properties in this market because she didn't live there either. And it was like the bomb dropped. I was like, oh my gosh, what's going on? Man, by the time I got down there, it was too late. What they were doing was basically renovating units and then stripping them. I would come down, see it. They would strip them out, take the materials out to another place. And they were doing that to a bunch of different places. Slowly but surely, man, they closed their doors, filed for bankruptcy, nothing. The group got an attorney to do a class action lawsuit that they wanted me to get involved in. And I was like, no, I'm not going to do all that. The only person who's going to win is this. If they already filed for bankruptcy, what are we going to get other than a story? So I set out to try to fix it myself. My units went from like 50%, 60%, 70%, 40%, 20%. And now I have women, moms, and their kids who are on Section 8. We have really high bills. No one's paying those bills. And if I don't pay all the Section 8 money that we were getting for the other people who vacated because their rents were not now being done, I was going to have to now pay all this money back. Our escrow accounts are drained, and we were just freaking. So that was my lesson. Be there. Second lesson, I refinanced one of my other properties. I had another multifamily property, and it was a small multifamily in Hawaii. I refinanced that property, took money out, paid some investors that I had, and then ran out of money slowly but surely, and then filed for bankruptcy. Boom. Then the gavel dropped on my investors because you cannot choose who you want to pay. And they were like, oh, well, you paid who? The trustees went after me, man. They're like, dude, you made 800 grand last year. Where is it? I'm like, I'm a real estate guy. I spent all that money, so because I was feeding my own deals at that point, I was winning. And then all of a sudden it was like, okay, cool. And then they subpoenaed all my investors, froze their accounts that they put it back in because you cannot file for bankruptcy, pay people and then file for bankruptcy, choose who you want to pay. They pull them in after a certain amount of time, like 90 days, 91 days, some type of law. I don't know. I'm not an attorney. So I got an attorney that was kind of one of those like the attorneys who like you do like this over encumberancing bankruptcy. You just throw your towel in and be like, fuck it, we're done. I got them. And then we had leased some, what's that called? Snow equipment. I didn't know shit about snow equipment. I just got a lease. And it's like, it's in Ohio. You got to do snow stuff I didn't even think about. Right. And they're like, oh, you have a lease. The person you got the lease from is kind of like a loan. So they gave you the money for this equipment. You pay for the equipment in here, but now it's a lease. And I was like, what does that mean? And they're like, they're coming after you. And I was like, but I named them in the bankruptcy. And they're like, totally different. So it was like, dude, I had so much stuff coming after me all at one time. My wife was pregnant with my twins. My wife would actually show up to court and burst into tears. And my attorney, not the attorney that we hired, we fired that guy because he was asking me to give him more money outside of attorney. And I was like, that's stealing. You said that's fraudulent if I borrow money with no ability to pay it back, right? He's like, yeah. So I was like, you're asking me to steal and commit fraud? He was like, yeah. So we got rid of him. But my other attorney, she was like, stop bringing Sharon to court. She makes you guys look guilty. Because my wife's she was bad, So anyways, we went through a year of them under the microscope, looking at everything we did, dude. Every subject to deal I did, every time I made money, every place that money went. Where's the money? Where's the documents? This. And I was representing myself after a while, right? And I kept making offers to all of my creditors, and they were like, nah, we want more. And I'm like, all right, this is what I got. I don't have any more money to give you guys. And then it just kind of hit ahead where they asked for some paperwork, and I had to turn it in. Like, they were like, oh, we want 31, whatever it was. I have to get it within a month. So I turned the paperwork in on the 31st day of the month. It was supposed to be done on the 30th day, which I didn't know because I'm not an attorney. And they moved to have my bankruptcy kicked out of court. So, I don't know what it's called. It's like discharge or like whatever that thing is. My shit didn't stand. So for a year of going through this, I wasn't able to make any money, not able to do any deals. My wife was a realtor at the time, so all I could do was help her. So any money we had to give an account to it. I lost the property in Ohio. I ended up giving it back to the lady. I let the contract lapse. Dude, I had nothing. And then the judge was like, hey, Vic, you didn't do anything wrong. These guys are playing a game. I reprimanded a good bit of them for what they're doing. Yeah. So you can refile in 180 days. And I was like, no way. I'm never coming back in here again. And I got out of a long story long. This is that lesson. So I got out of there. That's when my mind kicked, guys, for people listening, about where this concept of go get the money came from. Because I was like, okay, I'm out of bankruptcy, but I do know how to do multifamily deals. I was just trying to do it over there. I'm just going to go find somebody to put up the money and let me use their credit. I'll find the deals. I'll do all the work. I'll split profit with them. I won't take a dime unless I make them money. Back to the grind. And then I did that. Within the first 90 days, I bought a $4 million property in Hawaii because I had a broker buddy of mine who's like, dude, you're doing it wrong. The way you're underwriting multifamily deals in the mainland, you cannot underwrite them there this way. Lower cap rate deals don't work like that. The 50% expense ratio that you're running, that is a general thing that you get taught in a seminar, 50%, 55%, 60%, it doesn't work. Those are three separate underwritings that you're using lumped up into one. And when you go to a bank, they're going to kick them all out. I was like, all right. So I learned. Then I started asking. I was like, hey, I found a deal, which I got it from him. And he was like, hey, I'll let you do this deal. And I was like, okay. And he's like, and if you do this one, I got another one, but I'm not going to do a contract with you. I'll just shake your hand. If you can't do it, I'm going to move on to someone else. So I was like that. But those are my nightmare deals. But that deal built me. That deal let me know a couple of things. That one, it's not fair. So don't worry about that. Right. Two, go get the bag, man. You got to control the money. like stop worrying about, just do it in your own backyard. I can keep my eyes on it. I can raise the money. It's easier for me to get people to trust me if I can see it. This isn't a game of, buy low, sell high. This is buy high, sell higher. This is the right deal. I think we're going to make a couple $1 million. I'm going to oversee the management company, and we're going to get this thing done. And I'm going to make sure nobody steals from us again. That was big for me. So that was the lesson. That was but that built who I am today. And then me getting lazy with that same investor who came on board and helped me with some of those deals later pushed me into who I am today now with building my own fund. I was like, dude, I'm not going to let somebody else, a bigger guy, yank from me because their life changed, which is what happens whenever somebody partners up with hedge funds. Whether you're a little guy or a big guy, you go to a hedge fund and they're the weight of the debt. If something happens on their portfolio, they can shoot back in and go, hey guys, we're changing the plan. And you've been busting your butt. So if you start your own fund, you have your own syndication, you can set those terms and you can share with people what you're going to do. And they can say, yes, I like that, or no, I don't. And if not, they can move on or start their own stuff. But it takes that, because you want an operator. I'm moving myself. I'm trying to stop saying I'm an operator. I'm a fund manager. But you do want somebody I always say, like, you want somebody who has a little dirt on. You don't want a spreadsheet jockey who's never been in the trenches before, who can't see when something's wrong. So long, and I apologize if that was long, guys. I do. I throw up on people.
Nah, man, that was perfect. That was actually it's always a blessing when we're able to learn from people's lessons. I don't even say mistakes, but people's lessons, man. Just because that's why we're here. That's why we created this community, man. Because we don't know who. I mean, that story most definitely impacted me. And it just kind of makes me want to even continue to dig deeper in the properties we're managing here in the Dallas-Fort Worth area. As operators, my philosophy is, property managers they make or break your deal. I mean, we can have this business plan, but if we don't execute, you know, we can talk all this shit and say we're going to have 6% cash on cash. We're going to refi year 3. You know, we might sell at year 5 or 7. We plan to do this, do that. But if we don't execute with and stay on top of our property manager, man, that shit's out the window. And I mean, I'm sorry that happened to you, man. And
no, it's good.
Glad you bounced back though, bro. I mean, you're here today, you're standing confident, and you know, I'm happy that you're in good spirits, and you know, you're here to tell the story. But man, I do appreciate that, man. Just kind of showing that and sharing that vulnerability, because not a lot of people like to talk about things like that. So I do want to thank you for sharing that side of you, man. And I most definitely learned something from that story, man. And I'm sure everybody in here did too.
For sure. No, man, I appreciate it. I appreciate you having me and even asking. Sometimes I'm like, man, like that feels like one of those, you know, because we all have stories that things maybe not went well. I won't say they messed up, but things didn't go as planned. And a lot of people like to hear down stuff. They're like, oh man, you know, tell me what bad. I ask people too. I'm like, what should I avoid? You know, then they're like, oh, don't do this, don't do that. And I'm like, okay, because I do have a true belief. Like if I know what not to do, then I'm just going to do the right things primarily, right? Even if I didn't experience it, I can hear somebody else's experience. Because I don't know about a lot of you guys, but that I'm not a person that needs to have my own experience all the time. If I watch you get hammered, I don't need to go do that. I'm just gonna stay away. You know, so you know, sometimes people like to hear all the bad stuff because they go, oh man, that's why you don't do it. Versus for me, you know, like guys like yourself, like, dude, I needed to hear that. Like now I know, hey, every time there's a 5% variation between this month and last month between expenses, I need to know what happened. Not that I'm calling anyone to the carpet, but because like you said, that 5% times 12 months adds up to investor returns not being hit. And when you have to give an account to somebody else, it matters. You know, and I think that's the big thing is about us being great stewards, not good stewards, great stewards. 1, over other people's money, and 2, over the responsibility that we do have for any tenants that we have, or not tenants, our residents, for any assets that we're looking at long-term, right? It's a big, man, heavy as the crown.
Damn, man. I love it, man. Thank you. And there's a lot of wisdom, man. We're already hitting that top of the hour. So just to kind of start wrapping up this call a little bit, man. What are three pieces of advice that you'll give all of us? We are, I ain't gonna lie to you, a lot of us are kind of starting in the single family, or either in the single family, either in construction, dabbling into the multifamily. Some of us are operators. We do own some units from the syndication side. Others have JV'd. So we got a lot of backgrounds in this room right now. And not to say that, you know, for the people who are going to watch this, we are on YouTube. We are on Spotify. So this has been, you know, everybody's going to come and listen to this again. But what are some three important pieces of advice that you would like to give us, man?
Great question, man. You know, I have a bunch of them, but the thing that I think will help most is some of the ways maybe that you might hear if you're new or you've been doing business has to change. That's number one. So like some people, man, just stay away from the bad looking properties. Like just go after nicer stuff over this next decade. Because if you get nicer assets, then in the future, you'll have nicer assets, right? So that's number one thing. So go after nicer assets. Number 2, never stop raising money. Never stop raising money. Like that's not just that like that I'm really talking to myself. It's like never let there be a day where I'm not thinking about raising money. Who do I talk to? How can I get? Because we're doing somebody a great service by actually giving them someplace to put their money, right? If they're in the bank, they're probably only getting half of whatever they think they're getting anyways. Even if they're getting 4 or 5%, they're paying taxes on it if it's not in real estate guaranteed. And you couple that up with any other fees and goes from there. So that's that. So, you know, so like I said, 1, look at better stuff. 2, never stop raising money. And number 3, probably go bigger. Like, and I know that's kind of like, what does that mean? But like, you don't have to go like big, massive, like I'm trying to do right now, but go bigger than just reach outside of your reach. It's kind of like if you're dating, don't go after the boy or girl that has been chose over and you're like, all right, well, she, you know, said they don't have a date, so maybe we'll just go. Like, go get the one that you think is just out of your reach, you know, because maybe nobody's asked them yet. And those are the deals I'm called. Like, I got a deal from BlackRock. And I'm like, oh, wow. And the broker's like, how'd you even get this information? And we're like, we called, we asked, we got in contact with the right person, and we sent it. Now, knowing what I know, if I would have just like, because I've studied these people, studied these companies, Larry Fink and all these guys, I would have never just randomly called, because I would have been thinking, nah, let me get with some of Marcus and Millchap guys and let's see what they got. Like, I was like, nah, I'm going to call them. Worst case scenario, they don't know who I am, and I can pretend to be whoever I want. I'm like, hey, who's in your acquisition disposition department, and what are you guys coming to market on over the next 12 months that we can take a look at early? Right? Sitting on a shit ton of money. Let's go. Like, right? Even if you ain't, say it. Like, just, you don't know what they're going to say, because in a year you may be, right? So reach up, not sideways and not down in your investment career, and you'll constantly get pulled up instead of reaching down. It's really hard to keep grabbing these deals over time. And just, and I'll end on that note. Think about it. If everybody just had the best run of their life in real estate, everyone had access to easy money, they fixed up a bunch of deals, there's a lot better, nicer deals out there than there are beat up, fixed up ones, because everybody had the opportunity to do that. Right? And your kids, if you leave, I call it generational work. If you leave generational work for your children, they're going to hate you for it. Right? They don't want generational work. They want generational wealth. So if you're going to go after any deal today, I mean, and that's real, right? Because today or tomorrow, I can get hit in the head tomorrow. I better have some good properties. And you don't have to die. I can slip in the bathtub and bang my head and forget everything. I can go to MMA and get choked out and stay under a little too long. It could happen. So that's the other thing is with that. So again, just go after better deals, man. You have an opportunity to go after better deals. No one's going to tell you no. Actually, nicer deals are actually easier to get, which is why when we do subject to deals for residential, so you guys that kind of, we talk about that and I'll end it. I do pretty houses. I don't do fixer-uppers. Why would I take over your debt on some shit I got to go fix up? I want it. If my wife doesn't want to move in it, I don't want it. Like when we walk by, like, hey, babe, I think we could get this house. Ooh, we should move into it. I'm like, man, we got to make money. What are you talking about? So like, that's the litmus test. Like, that's the acid test. If your family, your kids, or your wife don't want, like, ooh, can we move here? Like, that's the new deal for you. That old thing, we don't have to live in it. That's bad advice. You should have to live in it. You should want to live in something, because the person buying it or renting it from you, they should want to too. And somebody has to tell that story. And why not you? So that's the advice I would give, guys. I mean, and it's something that I've had to constantly retrain myself to think about, especially when you're raising money. Like, do you want to put your grandmother's money in this deal? So that's new. So that's those three things. I hope they help. And again, I wish I could answer some questions. I apologize if I overtalked this, but I appreciate you guys having me.
No, absolutely, Vic. Thanks for coming to us and also answered a lot of questions, a lot of great nuggets they have given today. I mean, for me, I learned, from a lot from your story, and also go big, right? And also making an impact to the community. And obviously, so I think we're at the top of the hours today. So we're going to call this for today. We'll wrap this up, and then we're going to have our breakout sessions after this.
Nice.
Okay, I'm going to stop.